Hello everyone, welcome back to the channel. I hope you're having a great day. Today we're going to analyze XAUUSD on the 1 hour time frame. First of all, let's start with the trend line, because it is currently the most important structure on this chart. As you can see, the market has been respecting this descending trend line for several days. Every time price moved higher, sellers stepped in near this trend line and pushed the market back down. This clearly tells us that sellers are still defending the upper boundary. However, something interesting is happening now. Price is no longer making aggressive lower lows. Instead, it is beginning to hold above the rising support trend line from below. This creates a compression between buyers and sellers, and usually, this kind of price action leads to a strong breakout. If buyers manage to break above the descending trend line with a strong bullish candle, then we could see momentum returning to the upside. That breakout would be the first confirmation that buyers are taking back control. Now let's move to the head and shoulders pattern, because this is another major structure visible on the chart. You can clearly identify the left shoulder, followed by a much higher head, and finally, the right shoulder. This pattern is traditionally considered a bearish reversal pattern, and after forming the right shoulder, the market reacted lower exactly as expected. But here's the important point. The pattern has already completed most of its bearish move, and now price is sitting right near the neckline support area. This means the market is reaching a decision point. Either sellers continue the breakdown, or buyers defend this area and trigger another bullish move. This is why traders should avoid entering randomly. Instead, wait for confirmation before making any trading decision. Now let's talk about the support zone. The support area around 4030 to 4022 is currently one of the strongest levels on this chart. Price has already reacted from this zone multiple times, showing that buyers are still interested in defending it. As long as this support remains intact, the bullish recovery scenario is still valid. If buyers step in again, we could see another move toward the resistance area. Now let's discuss the resistance zone. The resistance is sitting around 4095 to 4102. This area has rejected price before, making it the next major target for buyers. If gold successfully breaks above this resistance with strong volume and closes above it, then the probability of continuing higher increases significantly. A breakout above resistance would also confirm that buyers have gained momentum after escaping the descending trend line. Finally, let's talk about the demand zone, which is the last major level on this chart. If support around 4030 fails, then sellers could push price toward the demand zone around 3990 to 3982. This demand zone is expected to attract fresh buying interest because it has previously acted as a strong reaction area. If price reaches this level, traders should carefully watch for bullish confirmation before considering any long positions. So to summarize everything, the market is still trading below the major descending trend line, meaning sellers still have some control. The completed head and shoulders pattern has already delivered its bearish reaction, and now price is testing an important support zone. If support holds, buyers may attempt another rally toward the resistance around 4095 to 4102. And if that resistance is broken, the next bullish wave could begin. However, if support fails, then the market may continue falling toward the demand zone near 3990 to 3982, where buyers could once again become active. So be patient, wait for confirmation, manage your risk properly, and never chase the market. Thank you so much for watching. If you enjoyed this analysis, don't forget to like, subscribe, and share this video. I'll see you in the next market update. Happy trading and take care. Now let's take a look at EUR/USD on the daily time frame. The first thing that catches my attention is the major descending trend line. Since the previous swing high, EUR/USD has been making lower highs, and this trend line has acted as dynamic resistance several times. Every rally into this area has faced selling pressure, which tells us that the overall market structure is still leaning bearish. At the moment, price is trading just below that trend line. This means buyers are trying to push higher, but they are still struggling to break above this key technical barrier. Until we see a strong daily candle closing above the trend line, the bearish pressure remains in control. Now let's talk about the resistance zone around 1.1410 to 1.1440. This area has rejected price multiple times and is also aligned with the descending trend line. As long as price stays below this resistance, sellers may continue defending this level. On the downside, the next important area is the support zone around 1.1240 to 1.1270. If the current trendline rejection continues, this support becomes the most likely downside target. A clean break below this zone could open the door for even more bearish momentum in the coming sessions. However, if buyers manage to break above both the trendline and the resistance zone with strong bullish confirmation, then the market structure could begin shifting in favor of the bulls. That breakout would be an early signal that momentum is changing. For now, the chart suggests that patience is the key. The market is sitting at the decision point, and the reaction around the trend line will likely determine the next major move. Keep a close eye on the trend line first, then watch how price reacts at resistance. If rejection appears, the support zone becomes the primary target. If a confirmed breakout happens, bullish continuation becomes much more likely. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next market update.